Mr. Tom Sosnoff. And I have the great pleasure of introducing Tom. Tom, if we want to go ahead and let him mic up. Tom is with Tastyworks, and if you don't know Tom Sosnoff, you don't know trading. This gentleman and I met in the early 2000s, and I consider him a friend, and he is a beast in our industry. Taking it all the way back to Thinkorswim right now in Tastyworks. If he is a powerhouse in our industry, really one of those great guys that is out there to help you understand the markets and bring you great quality content. And so for us, it is a great pleasure and treat that Tom took time out of his busy day to come and join us. And so we're going to give him 1 hour on the mic. We got rave reviews when he did our last event. And so we're so excited that he took the time to come back and do it with us this time. Tom, are you there?
I am. Thanks, guys. Thanks, Raleigh. Thanks, Jeanette. How are you?
Well, we're doing great, Tom. We're delighted to have you with us.
I can't turn my video on.
You are? Hey.
Hello. How are you?
Excellent. Excellent. I need that backdrop you got going there. You're like,
I'll send it to you. That's just a virtual background.
I'm like, dude, you're like Netflix over there. Look at that. You just blew it for me. You blew the whole thing for me.
Well, you know, it's funny. We were using like the background in our homes, like, you know, and I'm sitting in front of a Campbell's soup display in my house right now, which doesn't make any sense. So don't even try to, here, let me see if I can find it really.
I mean, I think we need to see it now that you said that.
Now that you've mentioned it.
I'm going to try to find it. I got to see which background I have it. Oh man, where is it? I don't know.
Zoom is tricky sometimes. Got to find that sweet spot. Oh my gosh. I saw it.
I saw it there for a minute. It was like a shelves full of soup.
I'm trying to find where it was. Damn thing just disappeared on me.
You better be careful because you're showing us a lot of stuff.
No, I know. I got all these crazy backgrounds. No, I can't find it. You know what?
It was there, dude. It was up there just a second ago. We saw it like a flash.
I know it keeps disappearing, but
it was cute though. I saw it. We got it.
All right. So I've been using our green screen room, which is where we film a lot of, you know, just like interviews and commercials and stuff like that, and little bits and pieces. And so this is actually back in our studios in Chicago. So,
love it.
I'm in my house. I live in downtown Chicago. Where are you guys?
I'm in Austin.
I'm in Mobile, Alabama.
Beautiful. All right, cool. Well, I'm going to share my my trading screen, if that's okay.
Yep, go ahead.
Perfect. We're going to let you take it away.
Okay, and I didn't know if there's anything, Jeanette, I don't know if there's anything, if there's any interplay you want to have with, you know, when I'm talking or anything you want me to focus on, or you just want me to go?
Man, I just want you to talk. I want you to talk about what's going on in the market. I want you to talk about, I mean, I know options is your bag. I want you to talk to people about how they can learn and how they can stay involved. And I mean, we're in some crazy ass stuff right now. So it's kind of like, talk about what that means to you, especially going into election. Just talk about what all that means to you. And for us, I mean, I'm sure you could talk for 5 hours without me interjecting at all.
Sit back, relax, and enjoy the flight.
I'm ready. Have at it.
All right. So thanks so much for that great introduction, and thanks for everybody hanging out. I know there's a lot of people on today, so thanks for spending your lunch hour or whatever it is, breakfast, depending on where you are. And thanks for spending a little time with us. This is going to be, I hope, a fun and also a little bit of a learning experience. One of the things I like to do whenever I talk to anybody is on any kind of webinar or seminar or live events that we'll do again sometime in the future, is I just like to present a story with lots of different takeaways, like one every 5 minutes or 10 minutes. So at the end of this 1 hour segment, you have plenty of stuff to think about and plenty of ideas. So you can kind of reach into your bag of, you know, whether it's strategies or adjustments, tweaks, whether it's just things you can use in the future, whether it's new names that you picked up, you know, through the course of the discussion, whatever it may be. I think it's just so important to, you know, when you listen to somebody for an hour, that there's different kinds of takeaways and stuff like that. I actually don't have anything. I am the CEO of Tasty Trade, which is our own financial network. It's the largest digital financial network in the world right now. Users from 190 countries and a few million viewers, a few 100,000 viewers a day. So we focus on quantitative strategies and statistics and math, and just trading from kind of a math-driven perspective. We like using capital efficient underlyings like options and futures and things like that. And Tasty Trade is essentially a think tank. Tasty Trade owns Tastyworks, which is a brokerage firm, and that's how we create revenue. So we don't actually sell anything. We just would like, if you like our technology and you like our story, you like our technology, you like our personalities, whatever it is, maybe you'll consider using our brokerage firm. It's the fastest growing firm in America, next to Robinhood, which is a little bit different kind of customer base than we have. And I think you'll just love Tastyworks. It's an amazing piece of technology. And what I'm going to show you today is everything is live. Everything is on this piece of homegrown technology. This is the same team that 20 years ago, we built another company called Thinkorswim, and we sold it to TD Ameritrade. We were a public company in 2009. We turned around and built Tasty Trade in 2011. And 9 years later, this is where we are with Tastyworks, Tasty Trade, and a whole slew of other companies that in the financial space. We cater to individual investors, just like everybody who's listening today. We only deal with individual investors. No prop firms, no hedge funds, no money managers, no registered investment advisors. We are strictly 100% retail investors, self-directed retail investors. We don't even offer mutual funds or any managed products or anything like that. We are strictly builders of technology, software-based technology. We're pure Java platform, although we also have web-based and mobile and everything else like that. And what we built is, what you see in front of you is what we think is the first high-frequency trading platform for individual investors. We support all stocks, all options, all futures options. We're about to launch digital currencies on the platform on October 1st. And that will pretty much cover just about everything that we're allowed to offer. The Tastyworks platform is also customer and product indifferent. What that means is that no matter who you are, no matter how much money you have in your account, you can essentially do whatever you want to do. What I mean by that is we don't have different levels of suitability and different levels of requirement. Like you don't need to have $25,000 to trade a certain product. You don't need to have a certain amount of money to do a certain thing. And you can do whatever you want to do in a regular account, in a portfolio margin account, or in a IRA account. Yes, you can even short naked options in an IRA account if you want to. So we're very flexible in that regard. We've been leading the charge in the industry as an advocate for retail investors now for 20 years. And it's just, this is what we love to do. And we're in some really exciting times market-wise. So again, my name's Tom Sosnoff. Thanks for spending the next hour or a little less than an hour, next 50 minutes with me. Just as a heads up, if you have any questions, we actually have Ryan and Scott, two of the guys that run our trade desk in Chicago and actually run our brokerage business. They're on answering questions. So that way I don't even have to look at the questions. I can just focus on the discussion. And if you have any questions, nothing at all is off limits. You can ask Scott, you can ask Ryan, or anybody else that jumps on to help out. I think Brittany's on as well. You can ask any questions that you want, and we'll be happy to answer them. And we have a nothing off limits rule. And if you want to email me afterwards, my email is tom@tastytrade.com, just tom@tastytrade.com, and you can ask me anything you want. And I'm happy to do my best to. I spend my life. I don't know about Jeanette or Raleigh, because I don't know if they spend their lives answering emails, but I'm guessing that they probably do. I spend my whole damn life answering emails and trading. So I am a legit one-horse, one-trick pony, or I'm a one-trick pony essentially, and I'm a kind of a junkie for this space. So there's so much stuff going on, and I think Jeanette just touched on it, and I think it's the right direction to go. The market's at record highs. The S&Ps are at record highs, and the the Dow's not at record highs and the Russell's not at record highs, but the indices that lead the charge, the NASDAQ specifically, record high, and the S&P's at a record high. And today is no different. The S&P's are up 11 right now as we're doing this, and the NASDAQ is up 131. And as you can see here on the Tastyworks platform, everything is designed around watch lists. So this left-hand column watch list here, there's a couple things that we do that are a little different than let me go back to that VIX for a second. There's a couple things that we do that are a little different than other firms. In this, first of all, we offer, essentially, we offer everybody all the data that we have. So we don't hold back anything and we don't charge for anything. So we have a series of preset watch lists, or of course you can create your own watch list throughout this platform. And the platform is designed to be built around a watch list kind of mentality. What that means is everything is created or everything is designed to work off a watch list so that you don't have to type in anything. So for example, if you wanted to trade S&Ps right now, you just click on the offer price. If you wanted to trade NASDAQ, you just click on the offer price or the bid. If you wanted to sell Russell, just click on the bid price. If you wanted to buy bonds, just click on the offer price. If you wanted to sell gold, just click on the bid price. Everything in any watch list. Or if you're watching certain stocks like Apple, the same thing. Just click on the offer to buy it. Just click on the bid of Tesla to sell it, for example. And if you wanted to do anything, everything throughout the platform works the exact same way. So it doesn't differentiate between futures and individual equities. That's the cool part. Also, because futures kind of lead the marketplace because they're the most liquid and they're the most leveraged. That's why I kind of watch the futures market first to see what's going on. And as you can see here, like I said, the S&Ps are up 11, the NASDAQ's up 141. The Dow's actually rallied. It's up 76 points today, and the Russell's up 11. That's the first time it's shown any kind of uptick. And then as you see here, we also are one of the only firms to offer the new small exchange. And the small exchange is a product that is a futures exchange that I actually came up with the idea and the capital for, and we built our own futures exchange, which just went live about a month and a half ago. And so you can trade the STIX, which is a technology index. You can trade the small 75, which is a stock index that kind of mirrors the Russell. You can trade the precious metal index, or you can trade the dollar index. And we offer all these products as well as, everything else that's, as well as all the traditional futures, all the CME futures and all that kind of stuff. Now, what I thought I would talk about today, because I thought what's really interesting is the fact that, and let's go to the NASDAQ first. And I promised you a discussion on volatility and how to trade strategically in volatile markets. And I think that that's, I think it's a great place to start, specifically on a day when the NASDAQ here, and I'm not a technician, so I don't use a lot of charts, but for just the purpose of showing you kind of getting a visual of what the market's done recently, this is a weekly chart of the NASDAQ. And I put it up here because this would be the definition of kind of parabolic or hyperbolic, whichever word you prefer, from the March lows to where we are today. It's been an insane rally. But the crazy thing about this rally is that we've also seen, and this is actually a VIX chart right here. And so these are VIX futures. And what I thought's kind of interesting is when you go back and you look at kind of the VIX futures and you see what's happened to the VIX futures have an inverse relationship with the way the market operates. So when the market goes up, volatility goes down. There's this inherent, virtually 100% inverse relationship between volatility and the stock market. In fact, you can see this rally in volatility right here, where my cursor is right now. This was the sell-off in the March pandemic. This huge rally here in volatility was the sell-off in the March pandemic. This huge sell-off in the VIX was the rally in the stock market. But what's really interesting right now is, and you can see the VIX is actually up 27 cents today, or about 1%. What's really interesting is the last couple of days, as the S&Ps have made new highs, as the NASDAQ has made new highs, the VIX is also ticked up, which to a lot of market observers, to a lot of market watchers, this is something that we've never seen before. The market at new highs, but the VIX not nearly at new lows. In fact, if we go back and we look at volatility, and we go back, and if we wanted to actually go back even longer, you can see the end of last year, and this is December of 2019, where my cursor is right now, and where this line is. The VIX was trading at a level that was about half of where it is today. So what we've seen over the last basically I'm almost going to call it 10 months. What we've seen over the last 10 months is volatility go from an average of, let's say, 13.5, around that range, 13.5 and 14, to around 26, 27 in that range, or 12.5 to 26, somewhere that. It's essentially double where it was going back just 9 or 10 months ago. So this is right here. If you remember February of this year, February of 2020, we made new highs. And this is where volatility was when the market made new highs. It's right down here. This is kind of the level of just around, let's call it 15. So as the market made new highs between 13 and 15 in volatility, and that was just before the pandemic, just before kind of the late February, early March, we saw then, of course, this huge spike in volatility all the way up to 80. And now we see it back down to about 25, which is still significantly, like about 30% higher than normal levels of volatility, than like a 20-year mean in volatility. So what does the fact that we're trading 30% over a long-term mean actually mean? And that's what I thought we would cover today, and have a little fun with, like, just a discussion on volatility, the stock market, and how, or is there a way to take advantage of this strategically, or how would you play this strategically? I mean, we're in a period right now where we have heightened volatility and all-time record highs in price. So it's fascinating. Again, I'll go back, and this is the SPX right here, and you can see, I mean, these are crazy. This is a weekly SPX. We haven't had a down week in 6 weeks, but this week here was really pretty much unchanged. We're really talking almost 12 or 13 weeks consecutive where we haven't even seen a down week. And that's the SPX. If we went to the NDX, which is the NASDAQ, it's even steeper. I mean, vertical drop we're talking about here, this is insane. I mean, I don't think we've seen moves like this kind of in the history of the market. So it's a really interesting time. A, is it sustainable? B, is it a new paradigm? C, what is happening? The eye test, we walk around, I mean, I shouldn't say we walk around. I live in downtown Chicago, and the eye test says, wow, things are not back to normal. But the market test says something very differently. And when you look at all-time highs and you just kind of stare around a little bit, you're like, what's going on here? So what I thought would be fun is if we take a look at kind of all the different things we could potentially do. And I'm going to start with the QQQ. Now, the QQQ, the reason I'm starting with that is, first of all, the Qs are up $4 today, which is a huge move we're talking about a $300 stock. And for those of you that have never traded the Qs, essentially, it's going to look exactly like the NASDAQ futures. In fact, one NASDAQ future is the equivalent to 800 shares of QQQ. And if you're trading the micro futures, it's the equivalent of 80 shares, 1/10 the size. And in fact, what you're going to learn today through this discussion is that options equal stock equal futures, and there's absolutely no difference in the theoretical makeup of any of those underlyings. That's why we're product indifferent, because whether you trade stock in the form of an ETF, or whether you trade futures, or whether you trade options, I'm going to show you how they're all the exact same thing. In fact, if I bought 80 shares of Qs, or I did one, for example, MNQ, which is the micro NASDAQ, this is equal to 80 shares of QQQ. And if we go to an option page of QQQ, and I open up the trade and I look at the trade page here, if I went to October options, just for an example, and let's just say I wanted to go to this 40 delta put right here, the 292 puts, and I sold 2 of them, which is right here, that would be the equivalent of 80 deltas. So we're talking about 2 of those puts, 2 of the 292 puts is equivalent to 80 shares of stock theoretically right now, which is equivalent to 1 micro future, which is equivalent to 80 shares of stock. Boom, boom, boom. It's that simple. And if you're thinking, no, it's got to be way more complicated than that, it is not. And if you didn't want to sell 2 puts and instead you wanted to go out, just as an example, and you wanted to buy 2 of the 40 delta calls, you can go right here to the 40 delta calls and go to the 308 calls. And if you buy 2 of these, 2 of those calls is the same as buying 1 micro future, is the same as buying 80 shares of stock. It is exactly the same. There is no difference. Yes, there's a time component associated with these options. So there's volatility risk both ways. There's volatility risk if you sell them and vol goes higher like today, or if you buy them and vol goes lower. Yeah, sure, there's a volatility component. That's called strategy. So that's the strategic component. But when we look at the concept of being agnostic to the underlying product, it makes trading just so much easier because you're not focused on things that you don't need to be focused on. You're focused on using the most capital efficient product. Let me go back to this for a second. Buying 2 of these options here, just as an example, buying 2 of these options, they're $8.35. Let's say $8.30. That would cost you $650, about $1,600. Let's just call it $1,660. If you sold 1 micro future, I think that's about $1,300 or $1,400. I'm not 100% sure what it is right this second. We'll check in a couple seconds. And if you bought 80 shares of stock, 80 shares of a $300 stock would cost you about, let's call it $2,400. You'd have to put up about half of that. If you go fully margin, it's about $1,200. So you can see the difference in all these scenarios. It's not that, you can see how tight everything is. You can see how tight everything is. So when people go, oh man, you know what? Options are too expensive. Naked options are too expensive, or buying options too expensive. No, it's actually the same price as buying stock. It's pretty damn close. Usually futures are a little more capital efficient than stocks, which are a little less capital efficient than options, because options can be very strategic. But that's kind of in a picture. That's an interesting way to look at it. Well, on the Tastyworks platform, and I hope I'm not going too fast for everybody, but I want to cover as much as I can, because listen, I have an opportunity right now to talk to 500 and something people, and 500, 600 people. I don't even know how many people are on. And I'm sure hundreds more, probably thousands more will have a chance to watch this, on an archive later on, and tonight or tomorrow. And this is really important. This is how, try to name. Here's a fun little, I didn't know the answer to the trivia question that Jeanette asked, because I never watched Billions. I'm embarrassed to say I don't really watch much TV. I can't believe it. I just watch sports. That's about it. But here's a little trivia question for you. Try to name the CEO of an online brokerage firm. And no, Charles Schwab is not the CEO. He's alive, but he's not the CEO. Try to name the CEO of a major online brokerage firm. And the answer is, I couldn't even do it. So try to. And the fun thing about spending an hour with me is that, we have an amazing platform, and yet we have a relationship with every single one of our customers, and it's unlike any other firm in the world. And so this is what I get off on doing. This is what I love to do, as this is my hobby. This is my pastime. And I mean, maybe it's not the healthiest thing in the world for me, but it's what I love. So, we get to spend an hour and we get to talk about some of the cool stuff we've built here. Well, this is the simplicity of the Tastyworks platform, is that you are looking at the entire platform right here. Now, again, we built this to focus on speed. It's a high frequency platform, meaning that we're about 20 to 40 times faster than any other legacy platform out there that retail investors use, because we're brand new and we're built on all high frequency middleware, the same kind of middleware, that same kind of software that the high frequency firms use that actually interact with your order. Does that give you a huge advantage? No, of course not. But it means you're not disadvantaged on any level. We have a look and feel from a design team that has revolutionized the industry. And what I mean by that is we show you everything right in front of you from a single look. Like if, for example, here's a little tiny chart in the upper right-hand corner of the queues. If you don't want to see it, just close it up. Here's a bunch of information about the queues, like, just quote details and dividends and stuff like that. You don't want to see it? You don't want to see this? Let me just move these pictures. You don't want to see it? Just close it up. Here's, in this particular account, here's all the QQQ positions this particular account is on. And if you want to see it, great, it's over here, all your positions. If you want to see all the orders that you did today in a specific underlying, these, right now I'm showing working orders, but if I go over here in this particular account, I can show all the filled orders I've done today, or if I've done any Q orders. Well, I haven't done any Q orders in this account, but if you want to see all the working orders done, there's all the working orders from today. And if you want to put in an order to buy or sell something right now, like let's just say I wanted to buy some, or, oh, I'm a seller here. How can I be a buyer? So if I wanted to sell some Qs way above the market while we're doing this little, while we're doing this webinar, I'll throw an offer in up there, just a little bit above. And what you'll see is my order will pop in right here. And this is all live. So I just put an order to sell 500 shares of Qs up in here. And if I wanted to put an order in, let's just say to sell a micro NASDAQ, I'll throw one in above the market here too, just because I don't really care about these positions, but just so you can see it. So everything is done from a simple single interface. Here's an MNQ order working a futures market. Here's a QQQ order. If I go back in here and type in QQQ, I can see a bunch of stuff. So obviously all the months that are offered in the middle, days to expiration. On the right-hand side, what we call IVX. Now IVX is, and it's a model that we built to give you an accurate indication of implied at the money volatility. We call it IVX because we use a VIX style calculation. And then right next to that is the expected move. So if you wanted to say, hey, what based on real-time efficient markets, what is the expected move between now and September expiration, which is 17 days from now? The answer is $14 in the Qs. That's $14 higher or lower than where we currently are. That helps you to get some context. But what if you said, hey, I want to trade the Qs, but I want to know where we're going to be. What's the range between now and November? And how accurate is that? Well, it's so accurate, it's down to the penny, because that's all the marketplace knows at this point. Every bit of information that's known is in that calculation. So the move between now and after the elections, just about $39 based on current implied volatility. We use 60% of the value at the money strike, 30% of the nearest out of the money, and then 10% after that. So we smooth it out. It's like a kind of a modern day calculation for figuring out at the money implied volatility. Implied volatility is expected move. There's two kinds of moves. There's what really happened. That's historical volatility. That's the realized move. And then there's implied volatility, which is what's expected to happen. And that's how everything is priced in the derivatives market. And that's called implied volatility. Everything we do focuses on implied volatility. And what we like is a perfect number of days is 45 days. And if you look at October right now, October is about 45 days. So you can see in this particular account, all these positions have been rolled out to October because October is the perfect cycle. Now, if you thought about what I talked about just a couple of minutes ago, I started talking about the VIX, and I talked about how implied volatility is very expensive right now on relative to where it was the last time the stock market was anywhere close to these levels. Now, these are record highs, so we've never even been at these levels. But the last time we were even below this in January and February, the implied volatility was half of where it is now. So with implied volatility high, which means that there's a couple of things going on. Is there an election fear in there? Is there an election, I I wouldn't call it fear. I'd call it uncertainty. I don't think from a market standpoint, the market really cares who wins the presidency, because you can see right now, if it cared, it wouldn't, it wouldn't worry about the prices probably wouldn't be at all-time highs. So the market probably doesn't care who the next president is. And if you looked at volatility in 2016, volatility actually went down prior to the election. It was kind of a weird phenomenon. And so if we look at 2020, we're not that concerned about where implied volatility is going to be going into, or how much uncertainty is driving the rise in implied volatility right now. So I don't think that's it. So then if that's not it, where is all the uncertainty coming from? Where's all the fear? How come the fear index is upticking as the market's making record highs? Why is that? And we know it's weird, we get it, but why is it happening? And by the way, I don't know the answer, but we can think about it in terms of, hey, something has got to give. So when we think about something's got to give, is it a red flag suggesting that the market is on the verge of a sharp drop? I don't know. I mean, that would be I'd be inclined to think that before anything else. So one of the things that we do sometimes is we go look at skew, and skew is a not tradable, but it's an indicator that shows you how is the market anticipating, or what are the expectations around a 2 standard deviation move. Now, what that means is, what are the expectations of a move that only happens about 5% of the time? When we talk about a 1 standard deviation move, we talk about something that happens about 68% of the time, inside of 68% of the time. When we talk about a 2 standard deviation move, we're talking about essentially how we look at most positions from a risk standpoint. And, oh, we got filled on something. Must have been the mini NASDAQ. Beautiful. And the other thing is, we will look at things from a standpoint of, when we look at skew, we'll look at things like, for example, what is the risk of, when the skew's really high, how is the market anticipating the risk of a move that is 2 standard deviations or greater? And at 144, with about 150-ish level being kind of the max we ever see, the market is very nervous. So based on skew and based on implied volatility here, we can draw kind of a very short-term conclusion that, hey, you know what? Market's scared. Now, is the market scared of COVID at this point? And the argument would be probably not. The pandemic scare is over. Is the market scared? Is the market scared of the election? And the answer is probably not, based on historical volatility around election time. Is the market scared that we may be overdone? Sure, maybe that makes sense. Is the market scared that there is no volatility sellers? And the answer is, yeah, probably a little bit. And then the last question is the market scared of all the gamma risk that's out there? And I'm going to argue that, yeah, maybe it is. So let's take a look. We'll go back to the Qs. And like I said, when you type in Qs, lots of things happen. First, you can easily just click on a chart here to look at the Qs, and you can see how crazy hyperbolic that is. You can, there's all these other choices I'll take you through in a few seconds, like a watch list, and you can watch Tasty Trade live. You can look at charts. We have a follow page in here, which lets you follow any of the traders we have in our studios. And, but going back to the trade page here, what's real simple is you pick the month you want. In this case, I'm going to pick, I don't need all these strikes. In this case, I'm going to pick October, because there's 45 days to expiration. And you might want to do something like, depending on what your personal bent is, you might want to say, hey, you know what? Yeah, I kind of like this story. Maybe I think, maybe things are a little rich right now. So I'm going to look at these Qs. I'm going to open up actually a couple more strikes. And I'm going to say, you know what? I actually have to open up more strikes than this. I forgot how high we are. I'm going to go up above the market. The market's currently trading at just about 299 in the Qs. And I'm going to take my cursor and go up to, I don't know, right here to the 306, just arbitrary. I'm going to pick the 306 calls, and I'm going to click on the bid. Now, one of the cool things about the Tastyworks platform is it doesn't have a history. It doesn't have a memory to know, like, it doesn't care what you do. We did this intentionally. So if you want to trade the 306 calls and just sell them because you're bearish, fine, just click on the bid. If you decide, hey, you know what, I want to collect a little more money, so I want to do the 304 calls, just drag your cursor higher, and now you're selling 304 calls. If you say, no, 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 that's too much risk, I want to sell the 308 calls because those are a little cheaper and fits my criteria better, then just drag them up. That's how simple this platform is. I'm going to go back to the 306 calls for a second, but that's how simple the platform is. And then if you said, you know what, I want to sell these 306 calls, but they have a 43 delta. What is my statistical chance of success at expiration? Oh, we tell you that right here too. It's 68%. That's your pop, your probability of profit. What is your statistical chance of making, because these are out of the money calls, what is your statistical chance of making $4 on this trade, keeping 50% of the max profit? Oh, that's 83%. How much stock equivalent? Well, we already know what that number is, but you know, like this shows you your daily decay and everything else. So all your Greeks are built into the same page. Now, that's cool as it is, but let's say you wanted to see, I don't know, maybe I want to see just a little visual of this. I'd rather see it in a different mode. We'll show it to you in a curve mode inside of a distribution curve. And here is your naked short calls. And if you want to make it a bigger strike, just lower the strike by dragging it. If you want to make it a higher strike, just drag it higher. You can see where you lose money, you can see where you make money, and you can see where you fall inside of the distribution curve. That is what we call the curve mode. We have a bunch of different modes. We have an active trader mode, which is for stock and futures if you want to trade really fast. We have a grid mode if you like looking at, for example, trading from multiple chart pages. And we also have we have a pairs mode, which I'll show you about in a couple seconds, and we have an analysis mode. But because I can't squeeze everything into a really tiny short period of time, I got to give you as much as I can, and I want to go back to this trade. So I'm going to, at this point, I'm going to go back to those 306 calls and selling the 306 calls. But you know what? Let's say I said, you know, I have to put up 20% of the price underlying, which is about $300, a little less than 20%, to sell a naked call. So the underlying is the equivalent of $300. 20% is about $6,000. So it's probably going to be about $5,000 to sell one lot of calls in there. That doesn't make any sense to me. It's too much capital. So I'm going to buy the 308 calls instead. You just click on the offer price. Now I'd be selling this call spread for 89 cents, which is, if I sold it for $1, I'd be selling it for 50% of the width of the strikes. If I sold it for 80 cents, I'd be selling it for 40% of the width of the strikes. So I'm right in between that. So I'm 45% of the width of the strikes. If you want to know your probability of profit, the back of the envelope way says it's the inverse of the credit you receive in the width of the strike. So it's about 55% probability of profit. And if you want to know what it looks like from a Black-Scholes model, it shows a 60% probability of profit here and a 72% chance of making 50% of max profit. And this is what we call a credit spread. Now, the cool thing about Tastyworks is you can take this position and you can change it to a wider, to a bigger spread and collect more money, like 94 cents, or you can change it to a narrower spread and make it just $1 wide to reduce your risk, or you can make it into a $4 wide spread by just dragging the underlying. That's all you have to do. And the other side of it is, let's say you said, hey, you know what, that's cool, but I want to sell an out of the money put as well. You can just click on the bid price of a put and turn it into a Jade Lizard. And remember, I didn't have to do anything else. Super cool, right? So now you have a Jade Lizard. I started with a naked option. I went to a vertical spread. I now have a Jade Lizard. And if I buy these, the 290 puts, now I have an Iron Condor. So, and now if I want to skew the Iron Condor and make it a wider put spread and a narrower call spread, that's cool too. And now if I want to change the quantity, so instead of doing 5 of each, I want to do 10 call spreads and 5 put spreads, I just can go down here and click on it and change the quantity. So the platform is really flexible. And if I wanted to erase it all, I just click erase, and I can go up to the top of the page here, and I can also just say, hey, you know what? I just want to sell a vertical and a put vertical. Boom. It just clicks it in for you if you want to. Or if I just want to go back up here and instead of put vertical, I just want to sell a call vertical, I'll go there. And if I want to drag that call vertical back to my original strikes, which I think was the 306, 308, there you go. and I'm back to that 89 cents. And if I wanted to route this order at 89 cents, which is a little bit, I probably, well, I'll route it at 88 cents. You just double click and there, that order's routed. And I'm not going to be filled because it's a little bit above the, kind of like right above the mid price. So I'm going to hit replace order and I'm going to lower it by a penny. And we'll see if we get filled here first in a second. Now, actually, that is the mid price right here. You can see mid price is 88. I'm working at 88. I'm going to move it down. I'm going to try to lower it to 87. And we'll see if we get filled there. We should be filled around a penny around mid price in the queues in general. Then if I want to come back up here to my watch list and say, hey, you know what? That was fun selling a micro NASDAQ a minute ago. So what I'm going to do is, if it gets back down to kind of my level here, I'm about, oh, there I go, I'm filled. So I just scalped that micro NASDAQ while we were on the phone, while we were on the webinar talking. And if you wanted to see kind of the two fills right here, I mean, it's a tiny bit of money, but we sold them at 51 and we sold them at 51 and we bought them at 39. So we made $11. I mean, $11 times $2, that's $22 in micro terms. But just to show you how simple the platform is, the reason I wanted to show you that is on this platform, you go from, you can trade futures options, stocks, and stock options, all from the exact same interface, all at the exact same time with no other changes. There's no other platform like this. The average person on Tastyworks trades about 1,100 times a year. The average person on like a, Schwab platform or E-Trade or something like that, I don't know exactly, but it's probably like, I don't know, maybe 20 to 40 times a year, something like in that neighborhood. So it's not, I'm not digging on those platforms at all. I'm not dishing on them, whatever. I don't know anything about them. I've never even used them. But my point is that this platform is designed for people that love markets, want to participate, are active. And the cool thing is, another cool thing is, if I go back to these options, and I'd love to give you a fill here just on this market sold off a little bit. As you can see, the NASDAQ just dropped a little bit. Well, there's my fill on my call spread. I just moved it a penny. And did you notice not a single screen changed? So what happened is my position just changed. My filled orders just changed. This working order above the market, I'm just going to cancel this. Cancel. That's how simple it is. Everything's right in front of you all the time. No screens ever change. And even if you were playing along at home and you want to see what do you think Tom's doing today? This is where we have a follow page, and you can just click on Tom and you can see everything that I've done today right on the follow page if you want to. So if I typed it in by symbol, it would just show you the last trade that we just made, a couple seconds ago. And that's how much, we don't show it for every customer, obviously, but just for purposes of showing, just talking to you about what we're doing, I think it's super interesting and fun to see. Let me show you too. I'll take you back here. If you want to see a chart of the queues, just go to there. And if you wanted to watch Tasty Trade, you just click on here. I just don't want to click on it because it pops up a separate window. You can have your own watch list built into here. And then of course, if you want to go back to the trade page, you just click on here. Now, I'm going to show you this because let's say I want to go back and I wanted to do an iron condor in here. So I could just click on, I'm going to sell an iron condor. I could just click on selling an iron condor. I could make it equal width away. But the reason I want to show you this for 1 second is this is the mode that I like to use, which is the table mode. But we have plenty of people that like to look at things in a curve mode. And in a curve mode, it just gives you a slightly different view. And it lets you see kind of a different way of looking at your position inside of a distribution curve. And so if you're a visual person and you wanted to see something, and again, you can adjust the strikes from in here, or you can go back to the table mode, and you can, my strikes are out of, here I have to go to, I moved them too far outside of this, but they're in the table mode. You can see them right here. They're down here and they're going to be up here. I moved them so they're a little bit wider. There's so many strikes in the queues right now that it looks a little bit weird relative to kind of having everything set up around the at the money. We always show an at the money line here. And additionally, on our quote view, we'll show a kind of a 1 standard deviation on both sides. And this is a 1 standard deviation line. This is a 2 standard deviation line. So kind of all of the moves are really displayed right inside the platform as well. And again, all the Greeks are displayed inside the platform. So we keep it super simple. And the order interface doesn't change. So if you wanted to trade S&Ps, just as an example, if you wanted to trade S&Ps and you want to trade S&P options, everything's the same way. If you said, you know what, I love trading S&P options, but actually I'm kind of bullish on, I don't know, corn here. So I go down to ZC, which is corn, and the options pop up in the middle. Corn pops up on the top. If you wanted to see a chart on corn, this is why we're product indifferent. It's exactly the same. And you can see a chart on corn. It's recently had a little bit of a rally. And if you wanted to trade corn, you could just open up October options and you would trade corn the exact same way that you traded the QQQ. Click on the bid to sell, click on the offer to buy, or if you don't want it to be, you want to sell both sides and sell a strangle, the exact same way. And if you wanted to route an order in corn, let's just say I wanted to sell, let's just say in corn, I wanted to sell an upside call. So I wanted to sell these calls, but instead of selling them at 575, I wanted to sell them 6 5/8. Just double click and your corn order pops in here. And if I went back and I wanted to buy the corn future, I just click on here. And if I go back to the original discussion, and I'm just going to cancel that order because I don't want that in here. What I want to show you was that you can trade stock options, futures, and futures options all from the same interface, all from the same look and feel, and it keeps things super simple. And if you are a technician and you like trading something from kind of like a classic grid mode, you can take your pick here. You can trade stocks and futures from any kind of grid. This is Disney, this is telephone, this is Amazon. And you can change the names. And if you have a bigger screen, I'm on a 13-inch laptop right now, but if you're on a bigger screen, you can have up to 10 columns, 5 on each. You can have 2 levels of 5, depending on your screen size. And the platform has functionality to automatically auto-size itself into whatever your font size is depending on the screen size. So when you log on, there's a setup box that lets you, organize the font size. So it keeps your platform looking great the entire time. And again, your positions over here, all your activity for the day over here. If you want to see quotes, small quote page up here, quote details over here, all your preset watch lists in here. And we have tons of different watch lists, like literally dozens and dozens and dozens of them. And if you want to click on your positions, you'd click here. If you want to see kind of all your activity for the day, you'd click here. And then there's other windows, along. Everything is compact. Everything sits in front of you the entire time. We also have, let me go back 1 second. We also have a way for you to, let me go back to the table mode for a sec. And we also have a way for you to look at kind of pairs trading. So let's just say, what's a pairs trade? First of all, it's buying something and selling something else. So let's just say, for argument's sake, I wanted to do a funky little trade where I wanted to buy IWM and sell QQQ. And hold on a second. So I am working no orders right now. So let's just say I wanted to buy 100 shares of IWM. This is a classic pairs trade, and sell 100 shares of QQQ. Why would I do that? Well, I would do that because I think the NASDAQ's going to go down and the Russell's going to go up. But why would I think that? Well, first of all, I can save that order in this presets over here. I can save whatever I'd like to see for the future. But the other reason I can do it is because if you take a look at this little graph here, it'll show you where this actual spread's trading. And you can see this spread hasn't had an uptick since March. And so the NASDAQ has essentially been crushing all of its competitors. And right now, the relationship between the NASDAQ and the Russell is at it's at a record divergence. So let's just say, I'll close up this chart for a second, and this is what we call a pairs trader. And let's just say I said, hey, you know what? I want to do this trade just to see what happens. Well, it's currently trading at negative 142.21. And what I'm going to do is, and that's because the Russell's at 156.52 and the QQQ is at 298.74. So at 142.21, I'm just going to hit review and send twice. And there's my order. Now I'm filled. And I just filled 2 different orders simultaneously. I bought 100 shares of Russell and I sold 100 shares of QQQ. And those are real trades, by the way. This is not a demo account. This is not virtual or anything. And so I did those 2 trades simultaneously with 1 click. And that's our new pairs trader functionality that's built into the software. So again, Ryan and Scott are on answering questions. My email is tom@tastytrade.com. Scott's email is scott@tastyworks.com. And if you have any questions about Tasty Trade, you can email support@tastytrade or tom@tastytrade. Or if you have any questions about Tastyworks, you can email support@tastyworks, or you can check out our website or anything else like that. Now, I have a few minutes left, so before I have to get into kind of wrap-up mode. And by the way, since we've been talking, the S&Ps have moved about. When we started talking 45 minutes ago, the S&Ps were up 11. They're still up 11. The NASDAQ was up 133. It's up 137 right now. So neither has really moved much. We sold a call spread in the NASDAQ, which is going to be virtually the same price that we sold it at. We bought some Russell and we sold some Qs in both the ETFs. That was stock trade. And so we made an option trade by selling a call vertical spread. We made 2 stock trades by buying Russell, selling Qs. And then we scalped a micro NASDAQ for 11 points or 12 points or something like that. Just to have a little fun while we were doing this discussion. And yes, is it addicting? Of course it's addicting. And is it fun? Yeah, it's fun. I'm going on, close to 40 years of doing this. And so, does it get old? Not really. Kind of never gets old. I mean, some things get old, like days like today when the NASDAQ's up again and you're short, it gets a little old. When you have a position on and it goes against you, like in Zoom or something like that, yeah, that stuff gets old. But generally the strategic side to this is just fascinating. So let's say I started out this discussion talking about the VIX. And when we trade VIX, a lot of times we can trade VIX, which is cash, which is the forward VIX. So what that means is when you trade VIX, you're trading the VIX 14 days from now. So you're trading the VIX at September expiration. When you trade VXX, which is an ETN, you're trading the VIX that actually is trading the cash, the spot market that's trading today. So that's why you see it up 15 cents. When you're trading the VIX future, and there's also a mini future now, it's up, you can see it's up about 1% today. This is the spot market. So V/VX is the spot market. That's what's happening today. VXX is a spot market. That's what's happening today. VIX is a market that settles to sometime in the future. That's why it's down today. So, because it's just playing catch up. Now, if you wanted to trade VIX options, that's cool, but you wouldn't really trade September. Let me take that back. You would trade September if you think there's a big move coming in the next 17 days. And that's fine. If you wanted to ever trade VIX though, you'd probably go out to about, 49 days in this case. It's the week following October expiration. And with respect to VIX options, the best way to trade VIX options, if you want to play a little bit long VIX, is not to buy outright VIX calls, because this is what we call skew. Let me show you the definition. Now, I showed you skew earlier. That is a skew indicator that measures outlier risk outside of 2 standard deviations. And it was 144. That is huge outlier risk. Pricing skew is different. Pricing skew means that this current VIX is trading for 25. This is the VIX. The 40 calls are trading for $3.50. they're $15 out of the money. The puts, which are only $5 out of the money, are trading for 10 cents. Now you're going to think that's insane. How can the puts that are $5 out of the money be trading for 10 cents and the calls that are $15 out of the money be trading for $3.50? And the answer is that's pricing skew. That's where the velocity of risk is. The market is not worried about volatility collapsing. The market is worried about volatility exploding. And so it prices things accordingly. You think you want to sell puts in the VIX? Good luck. There's nothing to do. If you want to sell puts at all in volatility indexes, you have to go to VXX, where there is some downside. But if you want to get long the VIX, the best way to do it is through a long debit spread. So what we like to do if we're getting long the VIX, which is not very often that we get long the VIX, because I'd rather get short delta somewhere else. But if you want to get long the VIX, you can buy, for example, one of the 25 calls. And because the out of the money calls are so expensive, you can sell one of the 35 calls. So you can buy a $10 wide call spread for about $4.50. That's probably the best way of risking one to make one if the marketplace really craps out and if volatility goes higher. If you wanted to do a very similar trade, you can do a similar trade by selling a similar call spread in SPY, and you're going to collect. If you sell just out of the money and you sell it $10 wide, you're going to collect about $5, and you're going to have virtually the exact same position on 1-to-1. So if you want to do one spread in the VIX, or you want to, which is buying a call debit spread, or sell one spread in the SPY, it's virtually the exact same thing. Buying a spread in the VIX and selling one $10 wide spread in the SPY at the money is almost the exact same thing. And that's how you take advantage of volatility expanding if you wanted to. Another thing you can do is you can sell an out of the money call spread in the VIX, and you can sell, for example, a call spread in the QQQ. That's a fun trade. That takes advantage of what I think is a high Q price and a high volatility price right now. You have heightened volatility. You have heightened prices in the NASDAQ index. Sell, and that's another interesting pairs trade. And that's what we call strategy. And the thing I love about options more than anything else is it's the most strategic instrument in all of finance. You can be right and lose money, and you can be wrong and make money. And that's fun. And everybody that's listening today, I mean, that's why you're listening. You're not listening because somebody like me is going to tell you, oh my God, the market's for sure going up or the market's for sure going down. You're listening because hopefully you picked up a ridiculous amount of tidbits in the last few minutes. Now it's 11:59. I'm so sorry I went over, or I know I have a minute to spare. I want to thank you guys, thank everybody listening, and Jeanette and Raleigh and everybody else that invited me to do this. You guys are the best, and I wish you the best of luck. And thank you everybody for listening. And I hope I filled up the hour with as much content as I could, and I hope you enjoyed that.
Well, I tell you what, Tom, it was fantastic. I mean, I really enjoyed it. You did cover a lot of ground, but you did it in a way that just made it, I think, easy for everybody to absorb, what you have to do. And there's a couple of things that I just noted. I mean, as I was listening to you speak, and I hope everybody here in the room recognizes this, that Tom really is a true pioneer in system and platform development services, especially for retail traders and investors. And I get the distinct feeling from talking to Tom and hearing him speak is that he designed systems that do what he needs them to do so that he could be effective as a trader. And by him doing that, he's giving us systems that benefit us. And Tom, I just think, at least one man's perspective on this, I think you've done a tremendous job and a fantastic service to this industry. I really do appreciate everything that you've done.
Well, I mean, I'm humbled by it and I appreciate it. And it's just awesome. And listen, I love the opportunity. I'm not just saying it. You guys know I would come on anytime to do this. I would do it 3 days in a row if I could. So,
Hey, don't be careful what you wish for.
Absolutely. I mean, I remember at the beginning, your day is consumed by emails and trading and maybe occasional sports. And Tom, do you have any insight as to when we're going to see sports coming back?
well, I live about, so I like to take a walk every day just to give myself some exercise. And
Sure.
so I live just west of Wrigley Field. I don't know if you've been to Chicago or you've been to Wrigley.
Yes.
So if you start at Wrigley Field and you walk out the front gate and just start walking west for about half a mile, a little over half a mile, you get to my house. So every day I walk by Wrigley Field. It's part of my route, and it feels eerie.
Isn't
like
it? Yeah.
like it's such a vibrant neighborhood. It's like so cool. I love Wrigleyville, and it just feels wrong.
Right.
Like, I'm so bummed. I'm so bummed, and you know, I usually go to a lot of games, and whatever. I mean, just I don't like. I mean, whatever's going on, everybody's dealing with it, and it's fun. But I'm done being home. Let's put it that way.
I think we all are. I think we all are trying to play this out like we're supposed to, but I think we all are like, struggling with it.
Absolutely. And I mean, I live here in Austin, and there's two things that would normally be happening a lot. Number one, we like to think we're the live music capital of the world. We have been dead for 6 months. I mean, it's just amazing to see all the clubs that are boarded up. And then we have the University of Texas here with a stadium that seats 100,000 people. And to drive by that, to your point, Tom, and just to have it just sitting there without any life around it whatsoever is just bizarre. It's absolutely bizarre.
Well, I'll let you guys go because I know you got your next person up, and I don't want to go over. So and thanks again. Love the opportunity. Congratulations on your successful event, and we'll see you next time.
That sounds great. Thank you so much.